Hello everybody, I hope you guys are doing well, having a great day or a great night. And before jumping into the charts, don't forget to smash the like button, okay? So let's do this. First we are going to talk about Bitcoin, Ethereum, XRP, and then we are going to take a look out of the crypto market, because we know outside there, the crypto market is just a small player. So we have to understand what is going on behind the scenes in order to also understand what can possibly happen on the crypto market. And this is very key, folks, because the idea is to follow the money to understand what's happening. And that's exactly what we are going to do here right now. Excuse me. Okay, so most of you are familiar with this chart, which is a perpetual setup for Bitcoin. And back in the day, we talked about this one many times. So this level right here is $12,018. Okay, we have a bearish spinning top, and that's these two guys here. If I'm not wrong, that's where our head and shoulders are located. And we are going to talk about this ahead. But so, have this in mind. Since 2017, December, Bitcoin never managed to stay above this level. And in the last attempt, they failed again. Not only one time, but two. So this candle here in the middle, it's the bearish spinning top. And it has this name for a specific reason. The second one, the hammer or the hanging man, it's also bearish. And why? Imagine you have the buyers and the sellers, and then the sellers make a big move, and then the buyers, they step in and start to buy, but they can't keep buying and make a new high, because that's what they need near tops. When you're close to a top, you have to keep making other tops, otherwise it goes bearish. That's how it works. And so now let's take a closer look on the weekly to have a better understanding, because if you are long or support XRP, Ethereum, there is no problem. You must understand this, okay? Because what happens on Bitcoin is going to echo on XRP and Ethereum as well, and many other tokens and coins. So let's take a look here. I want to show you some things that are very, very important. Just a second. Okay. So right here, this was September 16, 19. And here, back in the day, we had the people calling for moon, this is it, Bitcoin is going now. And right after, we had, by September 23, we had the back to launch. I believe you guys remember. And so people were calling for moon based on back at launch. And back in the day, I said the launch was to harvest the market and not to pump it, because the market was not ready yet. And so another thing here, these guys right here gave us a full bearish pattern, which gave us a bearish outcome. So no news about this. But if we look just a little to the left, we can see that we end up with a big shooting star, a lot of rejections. And let me show you something here. Second. Okay. So as you guys can see, even after the rejections, the price was being pushed down. Okay, and you guys can see this here. After the bear break, the the buyers, they were not able to keep pushing above 10,946. So another very key and important thing here, you guys know my approach. I don't look at the left and say, oh, just because it happened this way here, it is going to happen in the same way here. You guys know what I'm talking about. Yeah, so the thing here is behavior. We can look at behavior. Yes, we must look at behavior. But picking a structure or a scenario, let's say A, and moving this forward, the same thing, and say, oh, the market's going to do this just because it did in the past, doesn't work. Doesn't work. And yeah, so the key thing here, let's take a look before the C19 event, because we have a lot of information there. And today we are in the second wave of the lockdown. Most of you guys are aware of this already, and the problems, the issues are starting over again. So just a second. Okay, so the thing that we are going to look here is the low and the high before the February break, the C19 break. So we went up, and then we went down, and then we went up, and this was the C19 breakdown. Okay, so this kind of move here, folks, it's an attempt to continue a bullish, let's say bullish continuation, a attempt, but it fails. Why it fails most of times? First, because the market is not ready, is not prepared yet. Just a second. Okay, and the second one is like this: the bulls, they have to let it go for a while to gather momentum, to leave the bears to do their stuff before they can try again. But this try again is expensive, it takes time, it takes momentum, and a lot of things. And so it doesn't matter if there is people bullish. What matters is the crypto market's ready. Is Bitcoin ready? Is the external fundamentals ready? That's what matters. And what we can see day after day is people talking about Bitcoin only. Oh, Bitcoin, 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 yes, Bitcoin. That's not how it works. And some are showing the options. Yeah, and this is very interesting because they say, oh, we have options around the 12K, 13K, 14K, 15K. It doesn't matter, they are going to make it. And we have proof for that. Let's take a quick look here. So let me take note. Second. And also the 9,600 gap that people were saying. Bitcoin has to go down to fill the gap before continue going up. And we can see that this is not true. We talked about this many times back in the day. So again, just to conclude this, we go up and then we go down before the next bullish attempt. But here, as you guys can see, this also can be the loser's rally, which is a strong move up followed by a joint and then a lower high, which makes the loser's rally. Some people call this the dead cat bounce, but yeah. So have this scenario in mind because we have one very, very similar right here. Let me show you. The battle of Midway, we can take this guy here as the battle of Midway for the previous run. for the last one, this was our battle of midway. So we go up, battle of midway, our top. And why I'm calling this a top? Because we have technical evidence, 100%, not 99.9%. Another key thing, head and shoulders structure. So I talked about this as well, but let's make this clear. What is a head and shoulders structure? This is based on human biology. So left shoulder, right shoulder, the head. Where is the neckline? Here on the shoulders. And why we have a flat neckline? Because this is a standard for the humans, right? And when we see people addressing neckline is like this or like this, it's just saying like 1 plus 1 equals 3, or A, B, not C, but D. So I don't know where these people get these ideas, but again, folks, it's simple as this: left shoulder, right shoulder, head, neckline. That's how it works. It is what it is. And why it is a top reversal structure? Because it happens in a top and not inside. Okay, so this is inside and this is a top. The head and shoulders, just like our body, it's on top, not in the lower section or in the middle. On top. Limitation, extension, limitation. This is it. Simple. I don't remember. I'm going for 40 years. I do this for a living. So 40 years watching charts, trading, investing day after day. I never saw a head and shoulders followed by, here is the head and shoulders. Here is the bear break. I never saw a straight move up to take down the head and shoulders. Never. And not long ago, I saw looking for pictures in the Google about patterns and behavior because I had to show something to a friend. And then I found one example of a head and shoulders that broke bearish and right after, made a high. But the thing here is, it was a small picture, very close, and so we can understand what we had in the left. So the range, it could be in the lower section. And for this, I'm going to give you a simple example of quote, head and shoulders that are misplaced or in another place. And this is going to be very quick. Hold on. We are going to be right back to Bitcoin. Was right here, if I'm not wrong. Where are you? 30 July. March 2. December. Oh, right here. So right here we had the head and shoulders for XRP. Right here. And so back in the day, I saw many folks calling for what? Oh, it's bearish continuation, we are going down, this is it. But no. So XRP just had a small break and then a big break, but still the target for the head and shoulders was achieved, yes, but this is misplaced out of the proper place, which is on top, and this one was in the bottom. So again, if you look here, we can say, whoa, this is very bad, oh, you know, la, 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 etc. But when we zoom out, take a look at this. So that's the difference of placements, directions, okay? So just for you guys to have this in mind and understand a little more about this and behavior. Now let's go back to Bitcoin and excuse me, just 1 second. So folks, another thing, there is a lot of things to cover here, okay? There is no simple and quick way to explain all of this. So this is a 50 minutes video already, and probably we are going to reach 40 minutes, 1 hour, okay? I could break this down, but it is better to make this in a full video, okay? Because the ideas is still fresh in the mind. And you guys can always watch 20, 25, 20, 25, make like 1, 2, or 3 sessions, okay? So let's go. Yes, so right here, and understand the thing, very important thing. The behavior on this move is not going to be the same for this move right here. And why? When we start, let's say the top at 19,000, that's when we reach a top, of course. But since then, till the next bull break, the activity will fade, will decrease for the buyers, for the sellers, and this is very natural. There is nothing wrong about this. So it is natural to see contraction. So this is A, and this is B, and this is C. So this is natural for any market, any asset. And so let's acknowledge now the joint. Just a second, let me clear this. Yeah, so let's acknowledge the joint now. Which is this guy right here. So let me make a straight line for this one so people don't get confused. So this is the bear break. We had a top. It is a top, and why? Because we have a head and shoulder structure. Remember this. And now what we are having? Oops. We are developing a joint. So it's basically the same behavior in a different way. Why different? Because we don't have the same number of candles and the same time frame. Both are going to decrease, contraction. So this is basically contraction before expansion. This one here. And you guys remember this one here, it's the C19 event, was the first lockdown or the first wave. And right here we already have the second lockdown or partially lockdown. The second wave is confirmed, it's upon us. So let me clean this just a second. Past here. If we don't address all those things, we won't be able to understand what's happening in the bigger picture. A second. Okay, so now let's talk about a quick look on options. So here, back in the day, we had options that were about to expire, and the longs against the shorts were up around 80 or 75% for the longs that Bitcoin would make it to 12,000. There was for 12, 13, and 14 as well. And so we had the pump chasing the options, because folks who are long and have a lot of money, they're going to try to fill their bets or positions, because options is all about bets. And then we end up with the bear break. So the point here is, let's say you are a market maker, and here you have 80% people betting the market is going up. So Bitcoin is going to 12,000. And in this side, you have 20% people betting Bitcoin is going down. So if, just a second. So if the market maker allow the buyers to win, they are going to pay a lot of money for the majority of people. And exactly in this scenario, what happened? They punished the majority and paid for the minority. So this is how, one of the ways the market makers make money. Because otherwise, if for every scenario they keep paying the majority, they will end up broke. And another interesting thing for Bitcoin right now, not only Bitcoin, but also XRP and Ethereum, the longs are up 8 and 9 against 1 for shorts, which means if we have a bull break right now, what is going to happen? The market makers will have to pay a lot of money for the majority of people in the market. And we understand right now, not only for crypto or Bitcoin, whatever, the majority of bulls right now out there are the dumb money. Okay? Because every time there is a top, they call for moon, bullish continuation. And we can see this day after day for a long time. Every day, oh, is this it? This is it, moon, let's go. And no. But okay. So, and now we have the same thing for options happening. 13, 14, 12, 13, 14, 15, and they are the majority again. And also we have the futures gap for 9,600. And another one way below in the 3,000 range, 3,700, 400, I don't remember. But not necessarily it must be filled. Okay, this crypto market doesn't behave in the same way the conventional markets. But now let's go into the Bitcoin for 3 days. Let's take a better look here. Actually, not the 3. Let's go for, oh, just a second. Sorry. Forgive me. This guy right here, it's a shooting star on top of everything alone. And this is very, very bearish. It's a sign of top, a top structure. And now let's take a look. And so there are multiple rejections here. The head and shoulders is here. You guys saw this in all my previous video. We break this down many times already. So let's take a closer look. Yeah. How I should do this, line or straight line? Okay, let's go for the brush. So this is a valid head and shoulder structure. Let's go for the lines better. So let's take this one right here. So let's go for all the possible necklines, because it is not clear where the neckline is, and maybe we can have even 2. And again, you guys know my approach. This is not support and resistance approach, okay? We're talking about the neckline. So, left shoulder, right shoulder, head, and the left shoulder. And remember, folks, head and shoulders are top reversal structures, okay? If by any chance this scenario was something like this, won't be valid. And the same is true for the other side. Won't be valid. So here we have one uh, crystal clear head and shoulder structure. So have this in mind. Now let's go take a look on what we had and what we have right now. And for this, let's go into the 4-hour chart. Okay, so again, right shoulder, or head, left shoulder. Some people, I also talked about this, if I'm not wrong. Yes, yes. I believe it was in the last video where I showed you guys what happens after a the head and shoulders behavior, and also the inverted head and shoulders behavior. Just a second. So this doesn't necessarily have to happen. Sometimes it happens, other times don't. And the same is true for what? For inverted head and shoulders bull break. Before continuation. So far, this kind of behavior is normal. It's nothing special. But okay, and now let's take a look on the bearish structure that we had, and it broke bullish, which is exotic behavior. Yes. We're not looking to be 100% accurate here. So, how we knew this was bearish? Because we use Elliot waves to identify when it is bullish and when it is bearish. And there's another thing here. Okay. So we've been trading below our key level, which is 10,094 and 6. And it was moving in a bearish way with a bearish Elliot setup. Okay. And so what they made? They made a bull break. Yes, a bull break from a bearish pattern. And I also talked about this before. It's exotic, but can happen. There is not 100% for things like this when it comes down to patterns. I mean, patterns like this one right here. But even this one here, even the Elliot setup was 100% clear, because it is valid or not. So if it is valid, it's okay. Is there is 100%. We have validation. There is no such thing as confirmation. But okay, and so yes, so this was the bearish structure, and what it turned into after the bull break is exactly this. Okay, so if anyone draw these lines like this since the beginning, this is wrong. And why it is wrong? Because they are not acknowledging this wave right here. Okay, so you can make a Elliot setup work by cheating. That's not valid. So it would be like, let's say we have a move like this, and then you draw a line and leave someone behind. Won't work. Okay. Okay, so let's go. There's a lot of things still to catch on. So what we have for now, which we can address right now for Bitcoin. Let's take a better look here. Okay. And remember, a bull move will start with what? A strong bull break, and then it will start to fade before going up again. This one here, it's coming from two, not only one, but two bearish structures. So this is not a bull break. Bitcoin is still trading inside. It's not outside. So this is not a bull break at all. Okay. And so the lower section here, we have multiple valid pivots, and I can address this line. But the one for the top, I am speculating. Okay. I can't measure this in another way because it will be not valid, so it will be wrong. So this is the only way to do this for now. And this kind of aggression, it's inside bar trade, so we're still trading inside, so there is no bull break. And remember, bullish behavior, let me see. Okay, now you guys can see bullish behavior, straight shoot up outside, from outside nobody in my left. This kind of behavior actually, okay, so going up like this, ascending in ascending way, it's not bullish. This is price catch up. And this is not a Elliot zigzag bullshit. No, no, no. This is price assertion or correction or catch up. So what we know, we have a head and shoulders structure. We have a price catch up to the previous neckline, and Bitcoin is ascending in a bearish way. So this is the reason I am not bullish on Bitcoin in the short time frame. This is also for crypto in general, Bitcoin, Ethereum, XRP. Why? Because it's still behaving bearish. Okay, if something change, amazing. I am a bull in the macro of things. I am bull. I'm bullish on Bitcoin, Ethereum, and XRP. That's my stuff. But I understand the difference between the macro and the micro. So if I can buy at a lower price, why will I keep buying tops? It's the same example for people who do the DAC on tops. Since we understand DACs must be made on bottoms or the worst possible scenarios. So it's funny. It's funny, but whatever. And you guys know this is not a financial advice, okay? You guys know the drill. So Bitcoin is ascending in a bearish way. I'm going to show you now how things changed for a structure, not trend. The trend didn't change it at all, okay? So now let's take a look at what we have here. Excuse me. Let me see if I can make this better. Okay, better now. So if we look on the first one in the left, what we can see? A very aggressive move. Okay. When we look on the next one in the right, which is the middle, we can see what? It is more like not so aggressive, even after this big move up, which was from 10,500 to 11 and 500 as well, so $1,000. Why this is not bullish? As you guys can see, if we look on the center here, we can see a axis. There is an axis for everything. You can even address this like this. Which is something like this. So what is my idea, my take for Bitcoin right now? Everything that I can see here, it's bearish. Okay, despite everything that we talked about, and also the things that we are going to talk about in a few minutes. It's ascending in a bearish way, so this is not bullish. First thing. The other thing here is, let's say Bitcoin make a move like this. And then go up again. So this, folks, this is going to be a 100% bearish structure and behavior as well. Second. Okay. Something like this. Yes. So, ascending in a bearish way, the chances for this to end up with a bull break are very low. It is possible, it is, but are very low. And then another thing that is very key to understand this. Let's look at the time frame of things here. So since the right shoulder, the bear break, the bears needed 7 days and 8 hours to do their thing. 7 days and 8 hours. Okay. And now let's take a look how long the bulls are working inside this bear break. Okay, bear break, bulls working inside. There is no bull break. There is no new high. There is no nothing above at all. Let's take a look. So far, excuse me, the bulls are working for 31 days and 4 hours, and they still inside the previous bear break and below what? Below the head and shoulder structure. So what this tells us? What this teaches us? The bears are in control. So this is a fact. This is not what I think. This is not my opinion. My opinion here is not relevant at all. I'm just showing to you what is here, just translating to words what we have. Because when it comes down to technical analysis, we read what is written, okay? And so, there is nothing bullish here at all. And remember, everything that we talked about plus the C19 second wave, okay? Big problem. And now, if you watch it so far because you support Bitcoin only, don't miss the next ones because they are key as well to understand. And why? Bitcoin, Ethereum, and XRP, they are the columns of the crypto market. Yes, the tree. So let's go for Ethereum now. We are going to be quick on Ethereum because there's not a lot of stuff to see, to handle. Just a second. So, Ethereum on the monthly. The red one was a hull breach. We have a previous structure, bullish structure. Then we made a bull break above the previous one. Right after, we ended with what? A bear break below the previous bullish structure. So this is a hull breach, and this is bearish. And that's exactly what you guys can see on the red candle. So this is the monthly. Right after, we had the buyers buying the lower section, which we had oversold conditions in multiple time frames. This is natural for lower time frame, not friend, sorry, traders. Right after, the bulls keep buying. That's the last candle we can see right here. But what's the problem? As you guys can see, it is not all. There is another thing. Just a second, because there's a lot of things to catch. I will be very fast here. Hold on. Very important stuff. Take a look on Bitcoin volume since the low on March. We're talking about this, but this is very important as well. So we have price going up in a bearish way, and right now under a bearish structure and behaving in a bearish way. We have decreasing volume. It is decreasing volume. We can see crystal clear here. So back in March, we had much more people interested in buying Bitcoin, not only Bitcoin, crypto as well. And right now, we don't have the same kind of behavior. So this is a fact. It's here. We can see it crystal clear. Big problem. Now let's go back to Ethereum. Yes. And for Ethereum, it is even more complex because we didn't had raging volume, a spike in volume, large bullish activity. But somewhat, we have this to a certain point. Let's say, in my humble opinion, even before the big bull break, we had small volume. So we know that a lot of people were buying Ethereum to buy their DeFi tokens and other tokens as well. And this increased also was one of the reasons the Ethereum price increased. Okay, so but again, since the bull break on July, we traded this one multiple times, we can see the buyer's volume decreasing as well. So we have tops all over the board, not only for Bitcoin and Ethereum, many other coins and tokens. So tops and decreasing volume. So this is not bullish at all. Okay, so very important stuff here. Perhaps Ethereum and XRP are going to deliver or give us the best clues of what and how this is going to happen. And I'm going to show you right now. So this is the bullish structure. This was the bull break, all the way rejected, and this is the whole breach. Okay. Right now, what we have, very similar with Bitcoin, but way worse. Yes, way worse. Let's go for this one right here, and then I'm going to use my tool. Okay, so let's go from here. Yeah, no problem. So we can see these strong swings for the Ethereum, but it's still in a bearish way. And why bearish? Because remember, it's the same example for Bitcoin. Bullish structure, bull break, bear break, trading below the last structure in a locked range. This is the behavior of a bear flag, which is bearish continuation. So this is crystal clear here on the month, on the weekly. And now let's go for the lower time frames to see how clear it is. Not the 2 days, let's go for the daily. The daily, it's crystal clear. Okay. So, just a second. Forgive me. So, this was the first one, the first bullish structure, bull break, went down. This was bearish, but again, made a new high. This is the whole bridge. And right now, not Bitcoin, sorry, Ethereum, still trading in this tight range below the previous structures. Let's zoom here. A few days ago, maybe a few weeks, I showed the Ethereum chart on Twitter. And I showed you this, exactly this. Or something like this. And this for Ethereum. And I explained that this wasn't symmetrical or accurate. It was just showing the idea on how things were developing, playing out. And now let's go for the 4 hours because it will be crystal clear what we have, and we are ahead, 50% ahead. So it's very, very significant. Okay. Just a second. Okay. So right now Ethereum is developing a bearish continuation structure, which can be a bear flag or a descending triangle, whatever, still bearish. Okay, so the possible ways for this to play out. And again, this is not a double bottom, okay? Just like the head and shoulders, on top, double bottom on bottoms, okay? So we have the first decreasing high. Let's assess this in a different way, just a second. So this is part of my trading setup. The folks in the Champions Club are aware of this study. This one right here, it's speculation. I'm speculating here, okay? But I believe this is valid. Even if Ethereum make a new high here, it's probably, I'm not sure. There's no way to know for now. But it's probably going to end up in a bear break here, and then goes up again. But so far, let's speculate just for the sake of this example, so you guys can understand what I see and how and why. So this is a bearish continuation structure. We have evidence for this. We are 50% ahead, okay? Not moving to 50. We are past 50. And yes, so right now we are looking for the next low and the next high to properly measure the structure, and after we have a better picture we can look for targets. That's how it works. Targets are given by math, and clear structures provide the targets. Without clear structures there's no way to have a target. Okay, so my 2 cents here. Just like I told you, Ethereum can fall from here, which is somewhat likely, or can even go for this small high, which will be a lower high compared with the previous one. Then we go down, and then Ethereum goes up, and this is going to give us what? Even something like this doesn't matter. This is going to deliver a descending triangle, which is going to be 100% bearish. Okay. Yeah. So okay. So here, you guys also remember that I used here a plus and here a negative sign, which stands for if they are able to breach the previous high with a strong move and then develop in a bullish way, okay, then we will look for bullish continuation. But if this doesn't happen, we stand for what? Keep trading below the positive sign, the side, it's negative, so it's bearish. Okay. Now let's take a look on XRP. So 52 minutes already. So let's go for XRP. Okay, let's go for the monthly. Forgive me. So this one here, the shooting star, bearish, that we talked about. Right after, we end up with what? A whole bridge, which was a new low that broke the previous structure. No news about this. And right now, this is not bullish. This is still inside bar trade. Let me show you. It's very similar with Ethereum. Okay, so remember, rejection, shooting star, bearish hammer, bearish hammer, bearish evening star, because this is about the behavior, not about the candle. The bulls were not able to make a new high. And so what is funny, again, another thing here that is very important to acknowledge. Remember, swell 2017, XRP broke bearish. Swell 2018, XRP broke bearish. Swell 2019, XRP broke bearish. Swell 2020. 17, 18, and 19, what the Hackett gang was doing? Calling for moon before swell. And day after day, we can see how this end up. And it looks like people always forget what happened in the last year. I don't know if it's emotions taking over the chase for the daily opium. I don't know, but it's the same thing over and over and over again. So now let's take a look here. So this was the bear break, which provided the whole breach. And since this guy, this whole breach, let's take a look here on the daily, because this will be very clear. Not clear. Let me see on the 3 days. Okay. Okay, so these two guys right here. So I'm measuring this first red and the second red. The bears needed 6 days to do their stuff. A whole breach, 6 days. Now let's take a look on the bulls. "33 days trading inside the previous rejection." So this is called inside bar trade. And not only this, we had another whole breach, which was exactly this guy right here. So another whole breach inside a previous bear break. So this is all the way bearish, folks. And the XRP have a key level here, very key, and we were aware XRP would possibly behave around this level before a bear break, which is right here. So now let's take a look on the weekly, because it's crystal clear here. So remember, 6 days for the bears, 33 days for the bulls, and they still can't reach the previous floor, which is the one that was break right here. Second. So again, after the bear break, 33 days, and they are still not able to make it to 27 and 29. And believe or not, there's people calling for 6 cents. Yes. But okay, yeah. And so, another very key thing here is not only the 33 days behave in a bearish way. Let's take a look on the candles here. And on volume. So first volume and right after the candles. Back in March, end of February, March, we had a lot, oops, right here. We had a lot of people interested in buying XRP. And why? Because we had a low, a new low. So this always attracts people who understand that the overall picture it's bullish, but the short time frame picture it's bearish. And now let's take a look. Then, only then, on the end of July, we had a big bull spike. And then the bulls are gone. They are gone. There are no bulls for XRP. So, a thing that the claptraps are not going to tell you. Let's look on volume on the whole market and XRP. Since the end of July, around the second week of August, we had money leaving the crypto market and money leaving XRP. So if money is leaving, how we can end up with bull breaks? I don't know. You know, this kind of thing, calling for bull breaks without people interested to buy, without bullish volume. I don't know what these people are doing, what they are smoking. I have no idea, folks. But this is not technical analysis, and this is not in the charts. So if was true things about the swell, we would see a big bullish continuation behavior, because this will trigger FOMO as well. Otherwise, let's say people who bought here, so this would be the same behavior that we saw for XRP before. They buying a lot before swell, and they making the dump right after or by the end of swell. So they are literally selling the news and selling the events. Why? Because the market's not ready yet. If something changes, if something turns to bullish, all of us are going to be happy bulls. And let's go for new highs, for moon, whatever. Yes. But right now it's not here. So let's take a look on the behavior here. Now let's go for the candles behavior. As you guys can see, it's ascending. So what they are doing here, they are willing to buy the lower sections or the lows, but they are not willing to do what? To push price higher. And why? Guess why? Because it's not ready. It's not the time yet. And a thing that most people out there don't understand, the market makers, investors, big folks out there, they watch the charts day after day. So this is like a daily journal, newspaper. People watch this day after day, and they are fully aware of what is happening. Okay, the only ones who are not aware is the only ones who are always bullish, and they are always wrong. Okay, now let's just take a quick look here on the 4, because there are a few things to look at here. There is a friend who assessed this. I don't even know how to properly measure this, but I will try. So I really don't even know how to access this. So he made a draw. I think it was on his phone, and he made like a word falling wedge. Okay, I will tell you, there is no falling wedge here. Okay, you guys know my trading methodology is based, the first one, there are multiple methodologies. The first one is for patterns. Okay, so I study, I research, I trade, I measure patterns day after day, multiple times, in different markets, in different assets. And I can tell you, there is no falling wedge here. But let's say we have one. For the sake of this example, let's make a falling wedge here. This is hard work because it's a mess, but okay. So, no, not here, here. Yes. So let's say this is a falling wedge. The first thing here This is not a aggressive falling wedge, which changes the outcome, the payoff for the bulls. For example, a strong falling wedge like this is going to have a strong bullish outcome, but it is very, very unlikely to change to outcome the falling wedge. There are multiple things to understand here, so this is just a quick example. Okay, we're not acknowledging trends or micro trends or waves, whatever. So a more moderate falling wedge are going to give us a moderate bull behavior, and a very soft and slow falling wedge are going to give what? A weak bullish outcome, which is a payoff. It is what it is. It's a strong move that demands a correction before continuation. And so, most of times they will say, oh, there is a falling wedge here. Oh, this is it. It's a falling wedge. Falling wedge, big deal, falling wedge. So, if someone gives you a falling wedge and can't give you the outcome, the proper outcome, it's probably because it's not there or it's wrong. So, if we just draw a Fibonacci here, let's say something like this. Just a second. Not you. Oh, hold on. Now we go. No, yes, okay, let's go. Because this is the high. So this is the first thing. Falling wedge, you start from where? From a top, not from a bottom. Okay. But let's go for this one here. This whole thing's a mess, but okay, let's go from here. So as you guys can see, anyone can do this. There is no magic here. You just get the previous high to the last low, and you just place the Fibonacci. So what about now? What happens? What is the deal? The thing here is the average payoff for the bulls on a falling wedge, but this one is not aggressive, so it's not the same rules, would be a move to the 50%, which would give us 26.8042 cents. This would be bullish? Of course not. Take a look here on the left. A structure with this size giving this payoff, not a big deal, not bullish at all. And another thing here now, so okay, right here, I have to talk about this. I think I talked about this before. No, I'm not going to talk about this. Let's leave the clap traps to their magic stuff. So XRP. Do XRP have a bullish behavior here? The answer is no, XRP don't. The first behavior, bearish, gave what? Bear break. This one here, nothing special. This one right here, we have something here. Let me show you. 1 hour and 10 minutes. Hold on, folks. So what we have right here, we have a rising wedge inside something that could be a bullish structure. Okay, when I say bullish, it's not all moon. No, 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 no. We talk always about the joints, the structures, the patterns, the behavior, possible outcomes, direction, etc. And they screwed up again XRP. Again, just like, let me show you first here so we will have a better understanding. So this is the previous high. And this is the last high, a marginal higher high that end up in a bearish, end up with rejection. Now let's take a look on the left to see what happened right here. And they were calling for 40 cents by the end of the week. This is it, moon, XRP, yes, let's go crypto market. And yeah, so this XRP, I talked about this back in the day, XRP could be developing something very bullish. But they lost the hand, they lost the floor, who breach, bearish behavior, marginal higher high. I'm not saying that XRP would behave exactly like this. No, because we don't know how things are going to play out when things are not clear. But this kind of behavior here, it's all the way bearish. All the way. You can look at 100 assets in 3, 4, 5 different markets. The same kind of behavior will be there. So, not only this, marginal higher high rejected. Ascending is not going up. Going up is different from ascending. Totally different, different nature, different behavior, different outcome. If you look on volume here, guess what? We have decreasing volume. Is this bullish? It is not bullish at all. But okay. And from the other side, what we have from the other side? A rising wedge structure. And rising wedges are bullish. They are not bullish. Especially why? Because XRP could make a high from here. And then what people will be calling? Oh, this is it. It's a new high. XRP strong. XRP go blast everything. No. Because bearish structures give what? Bearish behavior. Bearish targets, bearish outcome, etc. And this would be even worse. Even worse. Why? Because this can. I'm not saying it will. It can. It can deliver what? A head and shoulders structure. So this draw is not guesswork because we have a possible DNA of a head and shoulders here. So it is fair to address this pattern and behavior as well. Okay. So let me see if I'm not missing or leaving anything behind here. Okay, so again, let's acknowledge the behavior. Bearish behavior, bear break. We talked about this back in the day. So this one here, it's a speculation, but we have valid pivots, so it's very significant. And again, the rising wedge, because we must acknowledge all the bearish behaviors. So XRP goes down and then ascend. It's different, totally different from going up and then falling a little and then going up again. So it's totally the inverse. Okay, so straight bear break, chop, 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 bear break, which is for a bullish scenario, it should be the opposite scenario. Straight up, chop, 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 bull break, chop, 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 continuation. And here we have exactly the opposite scenario. So this is why I'm not bullish on XRP in the short time frame, micro time frame. Now I have to show you something very key for the bigger picture, and I am about to end this video. Stay tuned. Shao USD Oanda. I'm not going for the macro. Let's go only for the micro here. Okay. Yes. So let me see the best way to assess this. No, it's not going to work from here to here, but it's also valid. But let's go for one and then the other. Yeah, so this one is very tricky because we have multiple pivots and a structure that's not 100% on place, because this guy right here, we have to acknowledge him, but he's still outside the previous structure, which was descending triangle. And we made 2-3 trades on gold. We end up liquidated on only one, the smaller one, but went in gains and then went back. But the bigger ones, the two bigger ones, we liquidated. We closed it. We were not liquidated at all. So we made great profits here, not bad. But again, so this is what I want to show you. This is gold on top, bearish structure, bear break, and now we are revisiting the previous structure, which is the same kind of behavior for head and shoulders, bear break, revisit, bearish continuation. So we have this for Bitcoin, gold, Ethereum in a weak way, and XRP in a very weak way, but the same kind of behavior in different markets. And now let's take a look on the and again, see, wasn't here. So we are making another visit, and we have the second lockdown and the second outburst for cases, C19 cases. Okay, and again, another very important key thing here, how gold was going up. How? And this is interesting because XRP is behaving in a very similar way with gold, but okay, that's not the thing we are looking here. going up in a bearish way, broke bearish, ascending, strong move up. That's a high compared with the previous one, but it's still dominated when it comes down on the bigger picture, especially as you guys can see. Let me clear this. Let's take a better look here. Just a second. Almost there. Yes. So this is what we have right now. It is true that if we look here on the left, we can also tell this is somewhat a neckline. The one below, and also this one right here, because we have multiple pivots on top of this level. So for example here, can you guys see it? Because the idea, when we talk about a neckline, this is not a barrier. This is a transition level. And this transition level have buyers and sellers. So we can add like a extra layer a little above and a little below. So this is what I call the 50% average for this range. The line, it's again, it's not a barrier, okay? It's like a period of transition that is going to decide for the ones in control. And also, sorry, another important thing here, this level have a lot of volume and trading activity, so it's very likely to revisit such level again because the market right now have low volume. Gold, Bitcoin, Ethereum, XRP. And now let's take a quick look on Euro USD. So we have left shoulder, head, right shoulder, neckline, can be here, can be a little above, can be a little below. That's not what we are looking for. And here we have the neckline. Can be because it can be a little above. If we do this, just a second. Right here we have a valid one, just like Bitcoin. And right here we have another valid one as well. And we can address the head and shoulders in two different ways. Actually not here, sorry, right here. So this would be the first way to address this. The second way is just like gold. Okay, and so remember, head and shoulders for Euro, descending triangle, which looks like a head and shoulder structure because it doesn't have to be symmetrical. Okay, so let's say we have head and shoulders for Bitcoin, gold, Euro. We had something similar but broke way faster for Ethereum, but we don't have one for XRP, but we had other bearish structure for XRP. So when we look on the macro outside, out there, what we have? Multiple top reversal structures and what? Bear break, a revisit. Folks, when we look on the bigger picture of things, there is nothing bullish at all. So and not only that, we just talking about this. What we have: second lockdown, second wave, restrictions, bans on flights. People can gather together again. I I I, I try to be or to see bullish things, but I can't see it, and I have evidence. So it's not my opinion. My opinion doesn't matter because I understand that my opinion can be biased, and if emotion is there or it's mixed, I can look for something that is not there. For example, there is a friend on the Twitter, and he's always bearish in the dollar. Always. Every analysis he does is bearish. But what is the problem? The problem is that his analysis is always broken. It's not valid, and this is not attacking his person, his character, what the kind of person he is. No, it is not this about. I'm talking about his technical approach, which is not valid. Which I believe he's a good person. I don't know him, but again, calling for just a second. I think the mic's too close. So calling for bear breaks and the dollar is going to kaput, to crash without technical evidence is not going to happen. So because people say, well, the dollar is going to crash because they are printing dollars non-stop. Okay, but so does every other country. Especially what? The euro, the yen, the Chinese renminbi. Everybody is printing currency. So, by saying the dollar is going to crash, we have to say all the other ones have to crash as well. Okay? So, this is Dow Jones, the last one. 1 hour and 30 minutes already. Sorry. But a lot of thanks. This was the big one, the bear break. As you guys can see, let me take a look here to see if this is. Hold on. Right here. No, so there is no completion. There's nothing complete here. But okay, let's go. So Dow Jones. Dow Jones. This is a leading economic. It's like a global leading economic indicator, which stands for the whole US economy. So let's take a look on what we had here. Another head and shoulders, which stands for what? Bearish top reversal structure, which is bearish. So folks, it is out there and is not in a single scenario. It is present in multiple assets, in multiple markets. So this is very significant, okay? Again, just like Euro, Gold, and Bitcoin, we have a aggressive move in the previous structure. And how is this aggressive move behaving? Let's take a look. What we have here, folks? We have a straight and narrow rising wedge. So this is all the way bearish, and we know the markets are begging. They are begging, oh please stimulus, we need more checks. And why the markets are behaving in a quote bullish way, that is not bullish at all, about the we are going to have stimulus, we are not going to have stimulus, stimulus, no stimulus, until there is hope. And this is the words of my friend Sir Nick True. I'm going to use his words. Until the markets have hope for the stimulus, they will keep going up. And this is not bullish at all. So the market's looking for the average Joe stimulus check to keep going up. This is a big sign of weakness. It's not bullish at all. At all, at all, at all. So this is concerning. Okay. And also we have a head and shoulders, very bearish, and not bullish at all. At all. Now let me use my tool here. 208657. I used this many times, especially the one that I called out before the crash, before February 20. You guys remember? And so what I did here, I placed the short before the close yesterday, and yeah, I believe this is it. And the proper word is, I believe this can be the last high before the bear break. For example, if by Monday they say, oh, there won't be stimulus, everything is going to collapse. And then, sorry, the excuse can be two. The second lockdown, so they can make like this, they can leave they can let the markets break, collapse, and then right after, oh, we will need the stimulus because, you know, we still don't have jobs, we still don't have we have a lot of people who are new homeless people because there's no jobs, the economy is awfully bad, everything's bad, nobody have money. How this is bullish? So when we look outside, there is nothing bullish. People are dying, streets are burning, riots, people starving to death. We can see a lot of military confronts out there. For example, Russia and Ukraine. I believe it's Azerbaijan and Kazakhstan, if I'm not wrong. Two are fighting. Like it's a big fight, folks. It's not a proxy war. It's war. Okay, when you have tanks and drones, jet fighters, exploding the other stuff. This is war. This is not a playground. And we can see the same behavior around not the same, but close. China, Thailand, Indonesia, Vietnam, Japan, South Korea, Philippines, India. They are all looking to prevent a confront against China. And China said they are preparing to invade Thailand. So, where is the bullish in all these things? I can see, folks, it's not there. I am bearish because I can see bearish things, bearish technical evidence out there, and those things are bad. Okay, so this is a long video already. Sorry, 1 hour and 30 minutes, so long. sorry, but there is a lot of things to cover. I stayed out a lot of days. The new wires arrived yesterday, and I couldn't turn everything on. So I was working like on 50% capacity, and yeah. So folks, this is it for now. Let's keep updating. I will keep updating the charts and making new videos, but I still have a lot of things to do here. But yeah, so let's see how this is going to happen. Monday can be a key day. Let's see. I don't know if we are going to have a holiday on the United States. I'm going to have one here in my country. But yeah, let's see how these bearish things are going to play out. Okay, and yeah, I will see you guys soon. Thanks for watching. Thanks for your support. And yeah, don't forget to smash the like button as well. I will see you guys soon. See ya.